On page 142 of Wirecard AG's 2018 annual report, in the section governing cash and cash equivalents, the company set out a condition. Accounts in the acquiring business would be reported as cash only if Wirecard had access to those funds in the short term. Ernst & Young issued an unqualified opinion on those financial statements. The opinion is dated April 25, 2019. 16 months later, on June 18, 2020, Wirecard published a statement to its investor relations website. Ernst & Young, it said, had received indications that balance confirmations provided by a trustee had been spurious, fabricated to deceive the auditor and create a false impression that 1.9 billion euros in cash balances existed. The audit opinion for 2019 was not signed. The accounts did not exist. The money was not there. The classification, the one that required confirmed access to count as cash, had been accepted for 3 consecutive years on the basis of documents the auditors had never independently tested. This is what the filings said. This is what was on the auditors' desks. And this is what a single independent confirmation would have revealed. Wirecard AG was incorporated in 1999 as an online payment processor. By 2018, it had joined the DAX 30, Germany's primary blue-chip index, replacing Commerzbank. Its market capitalization had, at certain points, exceeded Deutsche Bank's. It was held by institutional investors across Europe as a flagship fintech success story. The company processed payments for merchants. That was the visible business. But the segment generating the majority of Wirecard's reported EBITDA was different. Wirecard called it third-party acquiring, or TPA. The TPA model worked, according to Wirecard's public disclosures, as follows. Wirecard partnered with third-party companies in jurisdictions like the Philippines, Singapore, and Dubai to process payments for clients operating in markets where Wirecard itself was not licensed. The third-party partners collected the payment flows. Wirecard's share accumulated in escrow accounts held by local trustees. Those balances appeared on Wirecard's consolidated balance sheet as cash and cash equivalents. By 2018, the TPA business accounted for the large majority of the company's reported profits. The escrow accounts, the mechanism that made those profits possible on paper, held, according to Wirecard's filings, 1.9 billion euros. That figure represented approximately 1/4 of the company's total reported assets. The accounts were in the Philippines. The trustee was a Manila law firm. According to the Bangko Sentral ng Pilipinas, the Philippine Central Bank, not €1 of those funds had entered the Philippine financial system. Section 3.11 of the 2018 annual report sets out the accounting policy for cash and cash equivalents. The relevant passage reads, "Accounts in the acquiring business, which are in part not held directly, but instead held on account of Wirecard, are reported under cash if Wirecard has access to these funds in the short term. In contrast, the portion that Wirecard does not have access to in the short term is classified as trade and other receivables. That classification is conditional. For accounts in the acquiring business to appear on the balance sheet as cash, rather than as receivables, the company was required to demonstrate short-term access. The 2018 annual report classified 1.9 billion euros of those accounts as cash. Ernst & Young issued an unqualified opinion confirming the classification was accurate. The opinion is dated April 25, 2019. For a cash balance this large, there is a standard audit procedure designed specifically to prevent this exact failure. The standard is ISA 505. Paragraph 7 requires that the auditor maintain control over the confirmation process, selecting the confirming party directly, sending the request without client intermediation, and receiving the response the same way. Accepting a confirmation provided by the client or by a trustee appointed by the client is not an external confirmation under ISA 505. It is accepting management's assertion formatted as a document in place of third-party evidence. Ernst & Young did not contact the banks directly. The confirmations they received came from the trustee. The 1.9 billion euros was classified as cash on the basis of documents the auditor had not independently obtained. The 2016 and 2017 Wirecard annual reports contain the same accounting policy and the same escrow classification, restated each year. The balances grew, each year larger than the last, reaching €1.9 billion by 2018. In each of those 3 years, EY accepted documentation from Wirecard's Singapore-based trustee as evidence that the escrow balances existed. The documents included account statements and balance confirmations carrying the letterhead of banks where the funds were claimed to be held. Subsequent Singapore criminal proceedings established that escrow-related documents used in connection with Wirecard had been falsified. According to reporting by the Financial Times and other news organizations, when investigators contacted OCBC Bank in Singapore after the collapse, the bank stated that it had held no escrow accounts for Wirecard or its trustee between 2016 and 2018, and that Ernst & Young had not contacted the bank to verify balances during that period. A subsequent parliamentary inquiry in Germany identified this as one of a series of failures in EY's Wirecard audit over multiple years. EY's response, issued in June 2020, was to characterize the fraud as an elaborate and sophisticated scheme involving fabricated documents provided to deceive the auditors, a characterization that does not address why the auditors never made the one call that would have uncovered it. An auditor who accepts a balance confirmation from the party whose balance is being confirmed has not confirmed a balance. They have confirmed that the party is capable of producing a document. In October 2019, following continued reporting by the Financial Times on Wirecard's Asian operations, the company's supervisory board commissioned KPMG to conduct an independent special investigation. The scope covered the third-party acquiring business for 2016 through 2018, the company's acquisition activity in India, and its Singapore operations. KPMG delivered its report on April 28, 2020. Wirecard's public statement that day described the findings as largely exculpatory. The report itself said something different. On the TPA business, the segment producing Wirecard's core profits, KPMG stated that it could not verify the majority of sales revenues for the 2016 to 2018 period. It could not confirm the existence of the underlying customer relationships. Revenue from this business segment was, in KPMG's language, not verifiable. On the India acquisition, KPMG found that the purchase payments had been made exclusively to a private equity fund. The beneficial owner of that fund could not be identified. Wirecard's stock fell 26% on the day the report was released. The company's supervisory board issued a statement maintaining confidence in management. The KPMG report covered the same years, 2016, 2017, and 2018, in which EY had issued clean audit opinions. KPMG, with access to the same underlying records, could not verify whether the majority of Wirecard's most profitable business segment had ever existed. The 2019 annual report was originally due in April 2020. Wirecard cited COVID-19 and requested an extension. It was extended a second time. On June 18, 2020, the date finally set for sign-off, Ernst & Young issued a statement. It said the firm had received indications that balance confirmations provided by a bank trustee to EY for the purposes of verifying the 2019 escrow balances had been spurious. The word is precise, spurious, not genuine, fabricated to create a false impression. EY stated that it was unable to verify that €1.9 billion purportedly held in accounts in Asia existed. The 2019 audit opinion was not issued. This was the first year EY had refused to sign. It was the fourth year the escrow balances had appeared in the financial statements. The 2016, 2017, and 2018 opinions had been issued without qualification. The underlying confirmation documentation for those 3 years had the same deficiency EY was now, in 2020, calling spurious. The documents had not changed. The company's willingness to produce them had not changed. What changed in June 2020 was that EY attempted to verify the 2019 balances by contacting the banks directly and found that the banks knew nothing of the accounts. The trustee responsible for the Philippine escrow accounts was Mark Tolentino, a Manila-based attorney and former senior official at the Philippine Department of Transportation. Tolentino had been engaged by Wirecard as local trustee with authority to open escrow accounts on the company's behalf at 2 Philippine commercial banks, Banco de Oro Unibank, referred to as BDO, and Bank of the Philippine Islands, referred to as BPI. The purpose of those accounts, according to Wirecard's internal documentation, was to hold the third party acquiring escrow funds that appeared on the company's balance sheet. Both BDO and BPI issued public statements in June 2020 confirming that Wirecard was not a client and that no escrow accounts had been opened at either institution. BSP Governor Benjamin Diokno confirmed separately that none of the missing funds had entered the Philippine financial system. A subsequent investigation by Philippine authorities produced a specific finding. According to Philippine investigators, a BPI employee had admitted to receiving 10 million Philippine pesos in exchange for issuing bank certification documents that Tolentino's firm required to substantiate the escrow accounts. The Philippine Department of Justice filed criminal charges against Tolentino and several other individuals. The documents that satisfied Ernst & Young's confirmation process for 3 years had, according to Philippine investigators, been purchased from a bank employee by a law firm appointed by Wirecard. The balance they described, 1.9 billion euros in cash and cash equivalents, had no corresponding funds anywhere in the Philippine banking system. The German Federal Financial Supervisory Authority, known as BaFin, was aware of concerns about Wirecard's accounting from at least 2019. On January 30th of that year, the Financial Times published an investigation alleging that a senior Wirecard executive in Singapore had overseen practices involving the falsification of accounts and money laundering. Singapore police raided Wirecard's offices in the weeks that followed. BaFin's response was to ban short selling of Wirecard shares. The ban was issued on February 18, 2019. It lasted 2 months. It prevented investors from profiting on a decline in the company's stock price. In April 2019, BaFin filed a criminal complaint. The complaint was not directed at Wirecard. It was directed at Financial Times journalist Dan McCrum and his colleague Stefania Palmer for alleged collusion with short sellers and suspected market manipulation. The criminal complaint against the journalists was eventually dropped. BaFin did not open a formal investigation into Wirecard's financial disclosures until after the company had filed for insolvency. The documents the journalists were writing about described accounts that did not exist. The regulator that prosecuted the journalists had access to the same annual reports anyone could read. The note to the cash disclosures was 4 paragraphs long. Wirecard AG filed for insolvency at the Munich District Court on June 25, 2020. Markus Braun, the company's CEO, had resigned on June 19th. He turned himself in to German police on June 22nd and was arrested on suspicion of accounting fraud and market manipulation. Jan Marsalek, Wirecard's chief operating officer and the executive who had overseen the company's Asian operations, was placed on administrative leave on June 19th. Immigration records from the Philippines initially indicated that Marsalek had entered the country on June 23rd. Subsequent investigation by Philippine authorities determined those immigration records had been fabricated. Marsalek is presumed to be living under an assumed identity, reportedly in Russia. He remains a fugitive as of the date of this recording. On June 22, 2020, Wirecard itself acknowledged in a public statement that there was a likelihood the 1.9 billion euros in trust account balances did not exist. The creditors of Wirecard AG, institutional lenders, bondholders and commercial counterparties, faced losses against a balance sheet that had been certified as giving a true and fair view of the company's financial position by one of the world's largest audit firms for 4 consecutive years. The Munich Regional Court began criminal proceedings against Markus Braun, former accounting chief Stefan von Erfer, and former Dubai subsidiary head Oliver Bellenhaus on December 8, 2022. Braun has denied knowledge of the fraud. As of the date of this recording, proceedings remain ongoing. Trial dates have been scheduled into June 2026. No verdict has been reached. The 2018 annual report of Wirecard AG disclosed 1.9 billion euros in escrow accounts. Ernst & Young signed it. BaFin protected the company that filed it. A trustee fabricated the confirmations that supported it. A bank employee sold the certifications that made those confirmations look real. The public was told Wirecard was Europe's fintech champion. The DAX 30 included it. Institutional investors held it. The auditors confirmed it for 4 years running. The escrow accounts held no cash. The trustee documents were purchased. The bank confirmations were never independently sought. All of that is reconstructible from the public filings, from a 4-paragraph note to the cash disclosures and one call to a bank that EY never made. The third-party structure that made Wirecard's profits unverifiable is not an invention unique to Wirecard. The pattern, offshore revenue, unconfirmed escrow, a trustee standing between the auditor and the institution, appears in other collapses. That is where this channel goes next. Next, on hidden liabilities, Enron. A company that disclosed its off-balance sheet structures in the footnotes, marked its own assets to prices it invented, and watched its auditors sign off anyway. The documents exist. The footnotes were public. We will read them. Subscribe so you don't miss it.